Spotting and placing support and resistance is a vital skill every trader should have. I've done countless webinars on this, but the issue with webinars is they're 1 hour long, some of them are 2 hours long, and a lot of people don't have time to sit through an hour-long YouTube video just to learn to place support resistance. So I'm going to teach you how to place support and resistance in under 10 minutes. I'm going to aim for under 5, but I'm not sure if I can meet that mark. If you enjoy this video, if you find it useful, hit the thumbs up button below. Okay, so let's start with the main rules. There are 3 main rules to placing support and resistance. Rule 1, BW. Body first, wick second. That is the order of importance for placing support resistance areas. If that doesn't make sense, don't worry. There's going to be more on this in a minute. Number 2, recent data is king. Recent data is always more important than old data, which means you need to place your areas based on the most recent bounces, not old bounces. Rule 3, place them quick. The best areas are the ones that stand out and are obvious, not the little hidden areas that take you like 10 minutes of staring at your chart to spot. The obvious support and resistance areas work because they're the ones that everyone sees and everyone is using. If you place them quick, then you're more likely only going to place the obvious ones. All right, let's look at a chart and place these things. You are looking at a GBP JPY daily chart. I place my support resistance areas on the daily chart, and I use daily chart support resistance for trading the 4-hour, 6-hour, 8-hour, 12-hour, and of course daily charts. If I'm trading the 1-hour chart, I'll place support resistance specifically on the 1-hour chart using the same method I'm about to show you here. So first thing I do is I switch to the daily chart and I get about 6 months worth of data on my screen. What's 6 months worth of data? That's just 6 months worth of candles. So here I have candles from about the 15th of May to today, which is the 12th of November, which is roughly 6 months. It doesn't have to be perfect. It can be 5 months, can be 7 months, can be 8 months. It doesn't have to be perfect. So let's place some support resistance. After I switch to the daily chart, I look for the topmost and bottommost bounces. So the topmost bounce and the bottommost bounce are pretty easy to identify because they are the big V shapes. In this case, we have a huge V-shaped bounce from the bottom here. Now this is the bottommost bounce that I see. So I'm going to place an area here. Now, a lot of people ask me about these shaded areas. How wide do they need to be? The width doesn't actually mean anything. I use the parallel channel tool here on TradingView to create this shaded area, but I could just as easily use a solid horizontal line. A lot of my students use just lines. I prefer the shaded area because I think it looks better, but the width doesn't actually mean anything. Support and resistance areas, they are pretty wide generally speaking, but you can't calculate the exact width of each one. So the shaded area doesn't really have much of a significance. So that's the bottommost. Now I'm going to place the topmost, which is, around about here. That's the topmost bounce. So again, we have this kind of V-shaped bounce here, although this one's more kind of like a upside down U, but close enough. And we have another one that's occurring right now, and we have a previous one there. Now, remember how I said the rules to placing support resistance areas, BW, body and wick? Body bounces are the most important. So what's a body bounce? A body bounce is placing that center line at the bodies. If you're using wick bounces, what you would do is you would place it here, because that's from the wick. I place it from the bodies. Now for the topmost and the bottommost, you can place them based on just one big bounce, because usually these bounces are weekly, monthly, or yearly highs and lows. So one big bounce is enough. Next, what we're going to do is we're going to fill up the areas in between. Now, when we're filling up the areas in between, I prefer to look for at least 2 bounces that line up. So here we have 2 bounces that line up from this one here. So that bounce there, and then we have a wick bounce here. Now, you might be thinking, why don't you place it at the body bounce there? Well, that's because our other rule, recent data is always more important. So this is the most recent bounce. I'm placing it at the body of the most recent bounce, which lines up with the wick of this older bounce here. Recent data is always more important. And we're going to need maybe a few more support resistance areas. Don't go crazy. We're only placing the obvious ones that stand out to us. we don't need to worry about smaller support resistance areas. So I'm placing one here. Now this one is based on a much smaller bounce there, but we can see that it kind of lines up with this bounce. It's not a big V shape, but you do get that kind of V shape bounce here. Lines up with this kind of bounce. Again, these are weak bounces, so this is a kind of weaker support resistance area, but it is still a support resistance area. So that's enough for this GBP/JPY chart right now. We don't need any more than this. If we zoom out a bit, we'll see a big bounce up there. So we could also place one up there if we want to, just so we have an extra support resistance area. But the thing is, you don't really need too many support resistance areas. You just need a few around where price currently is. Because you can always just place more if price moves to that area. So if price breaks out up here, then we can place the other support resistance areas later. We don't have to waste time placing them right now. Okay, so switching over to USD/JPY, we have around about 6 months of data on this chart. Now we're going to place the topmost and the bottommost. Topmost is pretty obvious. It's here. We have a pretty big bounce there. The bottommost is around about here. Now, if you go further out, you'll see that the bottommost could be placed down here. But do we really need a support resistance area down here? Look where price is right now. By the time it reaches down there, it's going to be months and months and months. So we don't need that one. We're more looking for the current ones. So we got a pretty big bounce there, pretty big bounce from the top. Now we're just going to fill in the areas in between by placing the most obvious ones quickly. So that's a big obvious bounce. I'm going to place one here. That also lines up with this recent bounce, and it lines up nicely. We're placing it based on the bodies there. Bodies here, nice bounce. We can see a pretty obvious one here. Placing it at the bodies from this bounce, and then that bounce lines up nicely with this body bounce, that wick bounce, and this kind of older sort of body bounce here. So that's pretty straightforward. We could probably place one here based on this body bounce here, a few wick bounces there, body bounce there, body bounce there. And we could also place one here. Bit close together, but sometimes support resistance is close together. Now let's do one more, Euro USD. Euro USD is trending down, so it's a bit harder to place good support resistance on it. But that's why I picked this pair. We have about 6 months worth of data here. So place, yeah, the bottommost here. I'm going to base it on that body bounce, which lines up with that wick bounce. The topmost, I'm going to place here because this is where, I could go back here, like I was saying at USD/JPY, but that's very insignificant because price isn't going to be there for a long time. So I'm going to place it here. Now, fill in the areas in between by lining up the bounces. Place one here based on this recent bounce, which kind of lines up with these slightly older bounces here. There's a recent bounce there. See this body bounce here, which lines up with this wick bounce here. In the past, there was some bounces here, but it's, some wick bounces. It's not a hugely significant area, but it's the best we have. Now, we need some support resistance areas a bit lower because price has broken this low recently because it's trending down. So we need some lower support resistance areas. So we're going to go back to June 2017. I'm going to place one here based on that bounce. This has body bounce there or wick bounce there. And that's all we need for Euro USD. We have a nice lower one here that price seems to be headed to right now. And above, we have a bunch of support resistance areas that are more recently established. So that's how you place support resistance areas. You could see that I'm doing it really quickly. I'm not spending too much time staring at my charts trying to find the perfect area. I just place them quickly on the most obvious bounces, following a pretty simple method. You could use this on the 1 hour chart. You could use this on the 5-minute chart. This is how you place support resistance areas quickly and effectively. I hope you found this video useful, and I'll see you next time.